Hello class. Today's video is all about the company accounts, which you are supposed to go through your notes, and then I give you a highlight of what you are supposed to know on that particular area. Remember, company accounts, or the companies, it is the most sophisticated kind of a business that we are going to look so far. If you compare it with the sole trader, which is actually a bit simple, in the company accounts, we have got additional items that we need to know. Like, for example, we are going to have a case whereby we have the director's fees, salaries, and other expenses. We have the audit fees. We have amortization of things like goodwill, debenture interest, which actually don't appear in the accounts of a sole trader. So, in this particular case, the adjustments that are made are on the basis of that. First, we need to know and adjust the debenture interest. We need to get to know about the director's fees, the audit fees, all of which are actually taken to be expenses. Another very important thing is the corporation tax. The sole trader, we don't deduct the corporation, but when we go to the company, the moment we have arrived at the net profit, we should remember to less the corporation tax. Companies, they normally pay their taxes based on the profit that they make. Before now, we go and get a certain amount of money, which we normally share as debentures, and also transfer some to the reserves. I want maybe probably for you to look at this particular example and realize that the company is going to have quite additional things. Like now, here in the statement of financial position, we have the fixed asset, which is actually done normal, the intangible assets, which is the goodwill, copyrights, and patents, and also investments. If you invest in another company, is going to be appearing here. Then we have the current assets, which comprises of the stock, the debtors, the prepayments, and all that. And then you capture them there. Now, the part that is a bit different is the part of the financed by. The company is normally financed by the issued ordinary shares, we have the preference shares, and then we have got the reserves. The reserves, they also form part of the share capital. And then note that the reserves, we have got the capital reserve, the premium reserve, and we have the devaluation reserve, which is also should be considered when preparing this. Then the current liabilities are the bank overdraft, the accruals, and the interest payable, which has not been paid, but has accrued, and not forgetting maybe the other items, which is the dividends payable. These are actually the dividends which have been approved to be paid, but by the end of the year, they have not been paid, and they need to be paid accordingly. So those kind of things should be noted, and then you consider them appropriately where they fall. And then you find that it's going to be a bit simple for you to do such kind of questions. Thank you.